Good afternoon, Upper Sixth. So here we are. We are at our third bullet, which is bullet point two. We'll work on those numeracy skills later. So we're on to forms of business in the clothing market for independents and multinationals. Because we've got these multinationals in here, this opens up another can of worms possibly. So I've also linked a little bit into joint ventures and mergers and acquisitions. You've recently done global mergers and acquisitions with me, and you've done the mergers and acquisitions as part of theme 3 with your other teacher. So just think about, this could be the micro businesses where there's one person who's got a great idea. They've piloted the idea, I don't know, secondhand clothes on Depop or something, and they're dipping their toe in the water. It's relatively low turnover. They're not getting any debt at the moment, those sorts of things. And then we'll move on to the others. I'm going to do a whiz through the theory first. I do apologise for death by PowerPoint, but it's a good record for you. So looking at those different forms of business, we have got our sole traders, which are owner operators, usually smaller companies, and they are treated as self-employed people, which means when they earn around about £50,000 is what we say in the classroom, it starts to become not as tax efficient as being limited. Also, if Lucy and Yak, which is the picture we've got here, this is going to be your case study for your prep, if they are taking on premises, if they're buying equipment or they're leasing, for example, look for those sorts of clues in the case study. So property will come with leases. Leasing equipment is a legally binding financial agreement. If their brilliant ideas don't quite work out and they need, unfortunately, their independent clothing brand starts to not make any money and they end up closing it, if they've got debt left over, let's say the remainder of a 10-year lease that they've signed, then legally they are the same entity as the company. They've got that unlimited liability that we talk about in class, and therefore they can't suddenly walk away from the debt, which in theory you could if you had limited liability. So we're looking for opportunities in a case study to see that they are growing. If they're growing, they're making more revenue. If they're making more revenue, we need to think about, are they getting in debt with creditors? This could be fabric that they've got on a 30-day trade account. This could be, just to repeat, leasing equipment, leasing buildings, and also by employing staff. I'm thinking they're taking on these staff for a reason. Even if it doesn't tell me what their revenue is or their profits, if they're taking on staff, they're probably making more than £50,000 a year. So you could turn around and talk about the risks that might happen with a growing company. So unlimited partnerships are basically the same sort of thing, but with a couple of different people, two or more people. And I couldn't find any examples of this on the internet. I'm sure there's loads out there, by the way, because most of the businesses in this sector are SMEs or small companies. There's not as many as the larger ones for obvious reasons, because the larger ones are so large. So if you're thinking about this, it could be, I don't know, two tailors that get together. It could be my local wedding shop down the road that specialise in wedding dresses. She makes her own dresses. She designs them, and someone else she works with makes the veils. We could have a case study on wedding dresses. That'd be fantastic. Okay, so think about those smaller companies. Don't just think it's going to be fast fashion. It's the fashion industry. It's the clothing sector. And that could be sports. That could be weddings. Moving on to limited company. Now remember, if we're getting those typical questions, should they stay sole trader or should they go limited? It's linked to those reasons that I mentioned, that limited liability might be more useful. We also need to think about brand reputation as well. So if I was supplying to Selfridges, for example, We'll be talking about a brand that rapidly grew because of their contracts with Harrods and Selfridges. Um, if I'm a sole trader working out of my shed in my garden, then that might be fine to start my business up. But when I start dealing with corporate clients, actually having a limited having a limited company number and VAT number, which you'll need if your revenue's over a certain amount in the UK. Those are sorts of, I don't know, they're bits of evidence that your business is a little bit serious and maybe professional. So maybe it's the status that goes along with it to support this narrative of a growing company. So, and we then need to think about the types of questions. Well, the obvious questions are moving from limited to PLC. There are lots of companies out there. We need to think why. Go very careful with this question, please. You know, the standard answers that we read year on year is they'll be giving away part of their company and somebody might take over their company and take away their ideas. That is a rubbish answer. Don't use it unless there's something in the case study about hostile takeovers. Remember, it's one of those sexy things that students like to talk about. It's a bit like bankruptcy or self-actualization or predatory pricing. All of those things are absolute extremes that you should never talk about unless the case study talks about them. So with ASOS going from limited to PLC, it's a sources of finance question. How can they rapidly get money to help them grow? Well, they can either borrow it from the bank. Well, that's a long-term debt. That comes with interest. And actually, if they're already indebted, it's even more debt. We can go into liquidity ratios and all of those sorts of things. You're comparing it to sources of finance. You're also comparing it to retained profits. So retained profits slowly built up over time. Well, if ASOS would have waited for their retained profits to be in the bank, then maybe they would have missed the window to rapidly grow. Look out for those hints and tips that examiners leave you. Rapid growth. Ooh, if we want to continue with this rapid growth, we need some money, to pay for stuff and make sure the stuff is contextualized. So limited partnerships, same sort of thing. Not ever seen this in a case study before, but it's basically a limited company in some ways. Now I thought of some examples of this and I could only think about other sources of finance. So it could be something like the Dragon's Den or something like that, where a venture capitalist wants to invest money into a company. And those business angels, for example, they turn around and say, yes, I'll give you £500,000 as long as you give me 49.9% of your shares. And suddenly you've got those two limited partnerships. That's really a limited company, though, let's face it. But it's still limited liability. If it all goes wrong, they can still keep their house, pension, posh watch, and all those sorts of things. So we've then got PLC. Just as I mentioned about ASOS going from limited to PLC, this is openly available shares on the stock market. Yes, you can't control who buys them. That's not normally the end of the world, by the way, because we know the rule of supply and demand. If there's more demand for limited supply of shares, then the share price goes up and hopefully we get more money. The great thing is you never need to pay this money back. And you need to think about the opportunity cost here. How rapidly could the company grow without this money from shares? If I'm selling 20% of my company, I still own 80% of it. And that money I get from 20%, well, I don't ever have to pay it back. Will my original 80% be worth even more than the previous 100% in the future because of the money? I think the owners of ASOS are probably a lot better off than they would have been if they wouldn't have got that share capital. But we shall see. Yes, there's the risk of people buying your shares and, hostile takeovers, they do happen. I'm not going to tell you that they don't. Look at Cadbury's and Kraft, like we talk about in class. So, Yes, there is that, but don't just go to that on autopilot. Read the case study. Yeah, this is forms of business are one of those questions that get poorly answered every single year, and that's why they're in most exam papers. Go careful and practice. So lots of PLC stuff there. Burberry, for example, and again, look at how they've grown internationally. Then we need to think about charities. It's in the book, so you might get tested on it. There are charities out there, and also with the sustainability theme that is interwoven through this whole research theme, we need to be very mindful of charities. Recycle, reuse charities, and there's one there that I found on the internet. And they're trying to educate people as well. So when you donate your clothes to a charity, what happens with them? Well, some of them end up in landfill on the other side of the planet, like I've mentioned in a previous video. Some of them get recycled, some of them get reworn. Really depends if you're donating that fast fashion stuff from Boohoo, which probably falls apart after 3 washes. Please don't sue me, Boohoo. It might not be true. Hypothetically. So we've also got joint ventures, and here we can see Adidas with Stella McCartney, for example. So, you know, those collabs that you guys talk about in class, for example, so it's quite important for us to acknowledge that. This could be a joint venture, which is a short-term, possibly a long-term partnership. We see lots of these in manufacturing industries, for example, because the long-term strategy helps you to build those relationships. It helps Adidas, for example, work with the company that make their trainers. Adidas don't make trainers. They outsource it to someone who's very good at making trainers. But that long-term strategic relationship will hopefully result in better quality trainers, more trainers being made per hour, lowering my operating costs. You don't want to be chopping and changing your supply chain all the time, and sometimes a strategic partnership, a very long-term contract, can encourage your supply chain to invest in people, machinery and other things. Think about return on capital expenditure for the supply chain, and you will understand the benefits of long-term joint ventures. They can go wrong sometimes. Mergers and acquisitions, there's loads, absolutely loads. The example I've put in here is Jimmy Choo and Michael Kors, but that's an old one actually. If you think about fashion, we've mentioned it before, which is why I didn't put it in again. Think about Sports Direct, think about the Fraser Group, think about Karen Millen, think about all the brands that Sports Direct, before it turned into Frasers, have gobbled up because they were failing. Think of all of that. It could all be in a forms of business question. So think about that. It could be that they're going to sell them off as separate companies. Yeah, there are some stories out there of companies that will go from from PLC back to limited because the founder wants that control. So yes, possibly moving away from pension funds and big investment funds that have a lot of power. Doesn't mean they're going to take over the company, by the way, because they want the company to make money. Maybe some of the founders, Superdry is a great example, which we'll talk about again in a second. Some founders might just have enough of powerful shareholders. Okay, maybe it's all hot air. We shall find out. So quickly looking at some of the independent family businesses on there, there are loads and loads of these. I'll give you some stats in another slide across the UK. The majority of companies are small to medium-sized enterprise, so less than 250 employees. Quite a lot of them are family-run. Some of them were established by a grandfather or grandmother, and I like this one. When I found this one, it's based in Leicester, and you think of Leicester as, you know, that hub of textiles, and Boohoo still get some of their clothes made there. But this one was made they started their business in a coal shed. You know, How British is that? It's just fantastic. And now they do lots of other things. Their website is really, really basic. And, they make T-shirts, sweatshirts and hoodies, and some other stuff if you ask them. But what a lovely story. I'm just thinking that is relatively niche in a very mass market. You can't get much more mass than hoodies. And maybe they're bringing something of that British heritage. They've got the word heritage on their website. Maybe, I believe in that. Maybe it's a family-run company. It's made to a reasonable standard. I'm willing to pay a couple of quid extra. Okay? Maybe I just like dealing with them because maybe you get to meet the owner, which, believe it or not, for small companies is a big thing. Building that rapport with the owner is something that the big multinationals don't have. They may not want to, by the way. So we think about independent retailers. This is one of the independent clothes shops on Bedford High Street. You can see there's no people there. There's lots of people on Bedford High Street. Masons started off as a small retailer in one of the shopping arcades. They've moved into a much larger shop when one of the multinationals moved out of it. And if you go onto their website, it says currently being constructed. I thought that was quite quaint, actually. They obviously don't think that is important to them. And then you go onto social media and they've got nearly 5,000 followers. If you go onto their reviews, people love the service. This could be a case study of reasons to stay small. This could be a case study moving from limited to PLC because Masons are thinking about a national franchise, for example. Franchise is another form of business that could come into this. Rapid growth, opposed to that more personal, stable business that you're used to. It depends on the motives of the owners and the shareholders. So quick reminder of a Superdry case study that I did. There's the link to it. I won't talk much about it. There's loads of multinationals out there to do with obviously manufacturing and brands, and there's loads and loads of retailers out there as well. We've already talked about some of them. This Superdry case study it's a very good story, which I didn't steal from the Times. It's very, very interesting about how they struggled through COVID and they've not recovered. And now they've brought the auditors in to find out where they can save money. And the way they'll save money is get rid of their most expensive costs, which are people and shops. So we're going to probably see a lot less of Superdry on the high street. And they're not that strong online. So let's see what happens with them. So this brings us on to Primark. So if we think about Primark, they are owned by Associated British Foods PLC. Now, this is a great example of a conglomerate. Now, conglomerate is a company, normally multinationals, that are spread across multiple sectors. And we can see the 5 diverse segments. I've literally copied this off their website earlier today. So they're in agriculture, ingredients, grocery, and we can see that we've got retail there. The company that owns them, or the majority of this company, are a venture capital firm and also a very wealthy private family. And they also own Fortnums and Masons and other things as well. So this is a massive business venture. Primark on its own are in 16 countries. Yeah, so 56 stores, growth to that. And they're still expanding. And at the moment, with the current economic climate, here's a YED question. This inferior brand, feel good, fast fashion, go in with your net bag at the front of the door and walk out with 2 carrier bags full of stuff and change from 100 quid. Those sorts of retailers are doing extremely well at the moment. And Primark has seen rapid growth in times of economic uncertainty. They nearly struggled during COVID, but we were eating a lot of sugar. We were eating even more food because we were at home and we were bored. And clearly the supermarkets were still open. So the overall conglomerate did very, very well out of COVID. Extremely well out of COVID, which paid for Primark. Okay. Yes, it's an independent company. Yes, it's making reasonable profits from a lot of money. And we can work out a profit margin from that. But remember, this is a conglomerate as well. Okay. Now, if you don't get a direct question on conglomerate, which I doubt if you will, by the way, but you never know, then maybe for your 12 or 20 marker, if we're thinking about a MOPS factor, I don't know, maybe another global pandemic, should Primark go online? This could be one of your questions because they're one of the few retailers that do not sell via a website. They just do a bit of social media. Okay. The reason they make profits from selling cheap clothes is they are not spending tens of millions of pounds on marketing to me compared to Marks and Spencer's, Next, and the likes. It's a very, very interesting business model, which we'll explore possibly a little bit more in class. So we're going on to Superdry. First store 2003, and then they grew. Then they grew some more through franchises. This is an additional revenue stream, and also 499 stores across the world that are paying you for the privilege of promoting your brand. Yes, there are downsides to that, especially if there's rule of law issues in some of the countries, but they're in 61 countries primarily because of their franchising. Okay, so they've got revenue of 622 million. Remember, quite a lot of this revenue is through their franchise network, so the revenue they will get will be through licensing, profit share, whatever the contract is. And overall, they've lost 22 million pounds. Well, that's why their share price has gone down so much. So we can see we're up here, which is probably where our paper is being written. And maybe the paper was written about there. Let's hope so, because we've got this downward trend that you will remember is going even more. Now, remember, when we're looking at data extracts like this, we could be picking point A, percentage change, to point B. We could be smoothing it. We are not just going to describe this as it's getting smaller, because that's not going to help you in your essay. Percentage change. You see numbers, you do a calculation. This is a quantitative data extract. Okay. However, in the future, you never know. People might start going in and paying for billboard size writing on their t-shirts. So who knows? Yeah, as a nation, we seem to have fallen out of love with Superdry. It came in as that Japanese style of brand, and it very quickly turned into something else. Okay, and possibly lost in the middle of the market. We could do a bit of a market positioning question on this. Maybe we shall see. If this comes up, my prediction is that their share price is going down because of lower sales, lower profits. They've not increased their sales since COVID, and it might be something to do with the future. So this is what's happening at the moment. So they're restructuring, they're closing stores, they're cutting jobs. That's relatively recent. And then we can see that they're talking about profit warnings. This has led to this chap. Sorry about the red writing on there. He's talking about taking it back into private hands. Maybe he thinks that Julian's magic touch will suddenly revive this brand, and it might. You never know. He blamed the CEO that took over from him for losing direction, and clearly he's thinking about moving it away from investors that might be focused on short-term profits. Well, they're not that focused, are they? But they might be calling in all their debts. So we shall see what happens with that. But an interesting story and a potential going from PLC to limited. Should get ready for that one. So independents. Some independents are massive. Now the independents we talk about in class quite a lot of the time is in manufacturing. For instance, JCB is a massive multinational corporation that is across the world. They choose not to be on the stock exchange. So if you think about it, why? Well, they still go out and get investors. I think one of the Saudi royal family owns a big chunk of JCB, and lots of venture capital firms will have a chunk of it. But it's not open on the market for me to sell. They can choose who they sell their shares to. This does not mean it's only friends, families, and mates down the road that own shares. This is an international company. I don't know who owns their shares. I didn't dig deep enough, but it could be just the family. It could be part of the Saudi royal family, for all I know. So go careful with those generalizations. So they sell luxury as a YED question for you. It's market positioning strategy. It's those sorts of things. Founded in Yorkshire in 1936. Here's some photos I found on their website. And clearly looking very classy. They've been very classy since 1936 by the looks of it. So they've got 11 stores at the moment, not massive, but they're planning new stores. They seem to have a nice growth strategy linked to Germany, country as a market question. Should they expand in the UK, or should they focus on expanding into Germany? We've got differences in culture. Maybe they love the James Bond stuff that they have. I was quite excited looking at their website. We've got Pussy Galore, that's her name, and the wonderful Sean Connery, and look at his suit. Well, there you go. If you've got a spare 1,200 quid, you can have one of these suits. And I'm sure that Sean Connery looked better in it than their model. So these sorts of things are added value, quintessentially British. And if that niche brand identity helps them to generate a reasonable profit, and if the Germans like that brand, then we shall see. New York and Munich. Fantastic. So independent retailers, there's some numbers here for you. I'm not going to read them verbatim. I think you just need to understand that a lot of these are tiny, tiny companies. It could just be all the family. Yeah, there's nothing wrong with that. It could be the family that run the business with a couple of employees. So you've got that control, you've got that history, you've got that amazing work ethic that families will just dig very deep when it gets busy. So we need to think about it. So if we think about this as a small independent, so in retail, 90% of the sector is independent retailers. Okay, this could be one shop, two shops, but they're very small. 85% of wholesalers and 80% of manufacturers. Okay, now that doesn't mean that they control the industry. That just means that there's loads and loads of small ones that might be working as part of the supply chain for the multinationals. These guys have local knowledge. They can be flexible. They can be agile. And maybe the agility and flexibility is what the multinationals need. When Marks and Spencer's run out of their dresses and they suddenly need some more being made, they call the independents. Yeah, because maybe they'll dig deep and do it for them. So a lot of money, and we do a lot of exports. So we need to think about the components of GDP, aggregate demand. So the C plus I plus G plus X minus M. And so think about how this helps with macroeconomic objectives. We could get something like, should the UK government subsidise X in Leicester? Yeah. Well, maybe this helps us with that deficit, balance of payments type arguments. There's lots we can do, lots and lots of people. So if suddenly all these jobs are outsourced to Spain, Portugal or India, what does that do for the local economy in Leicester, for example? And then look at how many are in retail. If everyone moves online, yeah, there's a lot of people out there that may not have jobs. So maybe, it's great that people are buying stuff online, but if everything's online, we don't have the shopping experience. I think we would have poorer shopping experiences because of it. So here's one of my favourite little independent retailers. This is Gaff in Bath. And yes, I must be on commission for the city of Bath. So independent retailer, it's been there for ages. Look at this guy down here. You know, I've been buying from them for over 40 years, and now I take everyone with me. He's taken 12 photos. Must be so exciting, you know, and so helpful, understands your needs. That's the cool thing. The owner of Gaff, by the way, is Mo. You can pop in if you do a university open day and go and say, hello, Mo. I don't think you'll get any discount. And here is what they're saying. If you want comfortable jeans, they last for ages. Well, maybe this guy's on commission. So, you know, and even more photos. I don't think this is all from one guy, by the way. But the owner is always helpful. The owner. So reasons to stay small. And look down here. Mo's replied. How cool is that? Well, we think it's Mo, unless he's got a social media team. So this is fantastic. Now, if Gaff grew into a national franchise, most of my students would think, yes, they want to do that because they want to maximize profits. Reasons to stay small might be you just love your business. Yeah. Think about those, you know, satisficing. Yeah. So maybe I'm earning enough money to live the life I want. Maybe Mo plays golf 3 days a week, and, you know, he enjoys his life. Don't think that everyone wants to take over the world, especially if you get a case study on independent retailers. So luxury end of it. So there's a brand that was built relatively, or launched relatively recently, and they identified a bit of a niche. So the niche is restwear. Clearly they did very well during COVID, by the way, and it looks like they're continuing to do very well because of it. Sort of luxury, very, very comfortable, and it sounds like from the reviews that it's very well made. Very well made. So we're thinking about this niche, that we could identify a niche. When we do our market maps, we think, well, why is there a gap in the market? Maybe nobody wants low quality, high price. That's why there's a gap in the market. Or maybe it's sort of luxury restwear. So here's a clip from their website, for example, and I feel discriminated against here as obviously a male Dalmatian. £285 for my washable silk set. Washable is quite important when you're wearing it to bed. So we're also thinking, you know, you've got a robe there. So actually it's not cheap stuff, but, you know, they're doing very well, you know, so it's growing. Luxury loungewear is obviously the segment that they're in. And I tried to find if they were paying social media influencers. And I couldn't find anyone. I found a website that was offering to take my money to advise me how I could be one. I don't think a Dalmatian would go down well in their pajamas. But I did find a wonderful set of reviews. And this is one of the reviews, for example. You know, this person never thought that they would be endorsing a $258, obviously from the United States. It's soft, ultra luxurious silk. You'll understand why they're so expensive. It sounds like a YED question, just begging to be, you know, PED, YED. You know, I may not have a huge amount of money at the moment because my electric bill and my mortgage is so much. I just need something. I need a pair of £285 silk pajamas. So think about those things after washing. Yeah, much easier than I anticipated. I presume she just threw it in the washing machine. You know, with a mesh bag, of course. Look at that. And here's something. Won't find that in a Superdry shop. And she feels valued because of it. Actually, really, really want this, and this is a growing market. So think about it. This is not trying to stereotype like Lululemon. You know, how very dare they put larger sizes out there and go into markets that they don't want people like that wearing their clothes. Well, that's one way of upsetting potential people that want to spend money. I hope it ends well for you. But for these guys, look at that, fantastic. Okay, they're quite small. They 2 more than in 2021. Reasons to stay small. However, they've got some big corporate clients, haven't they? Selfridges and Harrods. Maybe this video will launch them into the stratosphere. Who knows, with my 3 subscribers. So think about it. Will they need to suddenly outsource? If they outsource to someone, will the quality change? If they suddenly start making more, will the quality change? If the quality changes, will I be willing to spend 285 quid on a pair of PJs? Probably not. So, focusing a lot on the USA, this could again be a country as a market, country as a production location question, but they're focusing a lot on the US. This is where their great success is, and they're obviously in some of those premium retailers. Should they open their own shops? Yeah, so this could be the type of question we come up with. Think about the investment, the risk, and also people go to Harrods and Selfridges that are more than happy to spend 285 quid on a pair of PJs. As a quick reminder, you'll be glad we're at the end of the video. As a quick reminder, you should have read this already. You should have read this in your groups. We did this for week 1 prep. If any of you haven't completed this in your groups, then you, are behind the game. You should have submitted your presentations to the rest of the group, and there you go. If you're watching this video and you've not got study buddies to work with, well, go and find some. If you can't find any, then I would skim through this document. It's very, very good. I actually really liked reading the Global Fashion Index of the winners and the losers. There's a big focus on sports. So remember, sports could be in this research theme. If sport is basically fashion, it is the clothing industry, so we could get half a paper on Adidas or something. So, we need to be ready for all of those types of things. Everything from tourists to social media, to those sorts of things. A bit of AI, yeah. There's loads of things out there. This report has got everything. And if you want to really dig deep into something a bit more historical, they've got an archive on the McKinsey's website. So I was skimming through the 2017 to 2023 report. There's one report that covers that range. And actually, they were forecasting most of the stuff that is now happening. Very, very interesting. Hope that was useful. Have a lovely afternoon. Woof.